So we were talking about TDS. So we have discussed various sections of TDS, like TDS on professional service, technical service, contracts, salary, and all these. Now there are some general TDS rules which applies on all sections. So it's not just for one, it's for every single section that we have studied. So what are the general TDS rules? So first is, if the person, like suppose I'm paying professional fees to a person, but he don't have PAN, he don't have permanent account number, that is PAN, then the rate will be either the prescribed rate. So what is the prescribed rate? 10%, 2%, and or 20%, whichever is higher. So if someone do not give me PAN, in that case 20% or prescribed rate, whichever is higher, will be applicable. There will be no surcharge or cess on TDS, like this 10% rate is a flat rate, 2% rate is a flat rate, except salary. So we have already discussed salary, that's an actual tax. Surcharge, cess, everything will be applicable. There is a form 15G which can be submitted by any deductee to deductor. That declaration in form 15G, if it is submitted by deductee to deductor, then deductor need not deduct TDS, but he will give this intimation of the form, this form 15G, in the TDS return as well as submit it to the income tax department that this person is giving me form 15G saying that do not deduct my TDS. Now, suppose, now there might be one very common thing which might come in your mind. The common thing is, you and me, like maybe you might have paid some fees to some professional. Your father might have paid some fees to some lawyer. So maybe so many things which are being paid from individuals to so many people, but they don't deduct any TDS. Like if your father is giving some fees to a lawyer, might be he's not deducting any TDS. He might not be even aware that TDS is applicable on him. So actually TDS does not apply directly on individual and HUF when they are the payer, when they are the deductor. It will be applicable only if turnover in last financial year exceeds 1 crore or 50 lakh. So 1 crore is in the case of business, 50 lakh is in the case of profession. So if a person is running a business, his turnover is less than 1 crore, he need not follow any TDS provision. Same goes with professional. If his receipts are less than 50 lakh for the previous financial year, then he need not follow any TDS rules. He can pay any amount to anyone. There is no issue. Now, tax deduction account number. So whoever is deducting TDS, whoever is paying some money to someone and deducting tax out of that money at source, then he need to apply for a tax deduction account number first. Then from this number only he can deposit the TDS, he can file the returns, and it is the identity for the purpose of deducting tax. It's a 10-digit alphanumeric code required for deduction of TDS by all deductors. This return, as I already told, TDS deduction is immediate, TDS payment is monthly, TDS return is quarterly. It is submitted in form 24Q, 26Q, 27Q for different things. Like for 24Q is for salary, 26Q is non-salary, 27Q is for TCS. After the return, the deductor should issue TDS certificate with its sign. If there are any defect or discrepancies in TDS return, he can revise the return. Form 26AS. This is very important. So there are two persons now. One is deductor, another is deductee. So I am the payer, I am paying some money to a professional. I am the deductor, the professional is deductee. So I will deduct tax of that professional and of that deductee, and I will deposit and I will file the TDS return showing that I have deducted tax of so and so person. Now, whatever I'm filing in my TDS return will be shown to the deductee in his TDS return. So what is that TDS return that he can check? The form is known as 26AS. Anyone whose tax is deducted by anyone, he can check his 26AS, because the TDS return which the deductor files, it gets reflect in form 26AS, which is TDS credit as per the return filed by the deductor, is available as in income tax login. So anyone can check his income tax login 26AS and check whatever TDS is deducted and deposited for him by anyone. Now we will talk about income tax return. So there are several forms for the income tax return. One, 2, 3, 4, 5, 6, 7 and ITR V. So Sahaj and Sugam are the other names for ITR 1 and 4. So ITR 1 is for a person who is having only salary income, only one house property and other source income, no other income. So this is a description. Who can file return in ITR 1? So there are different forms for different persons. This is income tax return form. Income tax return number 2. This is for whose income do not have income from business or profession. He can have any other income but not the business or profession. ITR 3 is the person whose income is under business and profession. ITR 4 is for the person who is having the income in business or profession but declaring the income under presumptive taxation 44 AD, ADA, AE. ITR 5 is for partnership forms, AOP, BOI or any other person to whom ITR 7 is not applicable. ITR 6 is for companies or other than companies which are not claiming deduction under section 11. ITR 7 is for the persons including companies who are required to furnish return under section 179 4A, 4B, 4C and 4D, that is exempted entities like trust registered under 12A, trust registered under 1023C. So these are the persons which are, or school, universities, these are the persons who are required to file return under section 139 4A, 4B, 4C, 4D. They need to file ITR 7. Now ITR V is a form. ITR V is a form which is generated when we file the return without signing. So return can be filed with sign or without sign. If we file it without sign, ITR V is generated. Once we send this signed form to the income tax department, then acknowledgement comes. So this is a mediocre stage between income tax return and acknowledgement. So whenever we submit return without signature, without digital signature, or even without OTP or any other manner by which the signature is affixed. So whenever we are submitting the return without signature, ITR V form comes, then we can verify it. V is for verify. Then we can verify it by way of signature, OTP, DSC or any other ways. Then only the main acknowledgement will come. So this is the basic details about ITR forms. What is income tax return? Income tax return is just a self-assessment memorandum, because only you are filing in your way. No one is stopping you to file anything. You can even show your income as 0 or your 10 lakh. No one can stop you. It's a self-assessed memorandum. You calculate your own tax deposit through income tax return. You can avail credit of TDS, advance tax, while calculating your tax. Presently, it is a electronic return only. There is no offline return. So electronic return was started in 2003. Currently, there is no offline return. Only online returns are there. The due date for filing income tax return is, for audited assessee, it is 30th September. For others, it is 31st July. So due date for filing income tax return is 30th September for the assessees who are under the audit, and 31st July for others. Late filing is also allowed up to 31st December with interest at the rate 1% per annum plus penalty rupees 5,000. The penalty will be 1,000 if your total income is below 5 lakh. Income tax return, as I just mentioned, that every return has to be signed. It has to be verified. So if you are not verifying return, you are submitting without signing, ITR-V form will be generated. And once you sign it, acknowledgement will be generated. So verification is important. Without it, the return is invalid. So who can verify the return? You can yourself verify. If it's a HUF, Karta can verify. If it's a company, director can verify. If it's a firm, partner can verify. Or any representative assessee as approved by income tax can also verify. Verification by digital signature, OTP, or by sending signed ITRV form through post to income tax department is also permitted. Whenever you file an income tax return, there might be some arithmetical mistakes in the return. There might be some clearly incorrect claims. The department can correct them. The department can uh, correct themselves and will send an intimation to assessee that this was your mistake. We have corrected it. So kindly take note and pay differential tax. They can scrutinize any return by sending notice within 6 months from the end of financial year when the return was furnished. And they can require you to submit any documents, details, or even personal hearing. So returns are being scrutinized. Any return can be scrutinized within 6 months of the financial year end. This is over. This chapter is complete from my side. Tomorrow we will start, in the next class we will start the next chapter, tax invoice, credit and debit note. If there are any queries, I am here. Please let me know in case of any queries. So there is just one attendee I can see. If you have any query, please let me know. Uh, for your information, we have already shared all study note slides to the respective authorities. So I've also asked them that they should share it with you. Now I'm not aware whether they have shared or not. I will ask them again to do that. And for this chapter also, chapter number 4, this is completed today. So this slides also I will share with the respective authorities. So only they can share with you. So you can maybe mail or call them to do that.